Hello, welcome to this CMC TV presentation. My name's Michael McCarthy. I'm the Chief Market Strategist with CMC Markets in Australia and New Zealand, and today I'll be talking about the 5 minutes a day trading strategy and the campaign that we'll be conducting during the month of March. Markets can be all-consuming. They'll take as much time as a trader is prepared to give them. But using the principles of successful trading, it is possible to be more efficient, to reduce the time spent in front of the screens, sometimes to as little as 5 minutes a day. And that's what we'll be looking at today. We'll be trading Euro-Yen every day in the month of March, blogging and tweeting live with the prices I'll be trading and following up each day with the results of the previous day's trade, keeping score throughout the month and aiming for a profitable strategy. But before we go into the 5 minute a day trading strategy, there's some important information for you to consider. And if you look at your screen now, you'll note that important information. I'd like to highlight two things. First of all, as traders, we're all different. We have different experience, different amounts of capital, different risk appetites, different goals in the market. And for that reason, because of that difference between all of us as traders, nothing that's been written today has been prepared with your particular situation in mind. Today's discussion is general in nature, and whether or not any of this information applies to your situation is a decision entirely for you. Secondly, what we're talking about today is trading CFDs, and CFDs employ leverage. Leverage has the potential to magnify not only profits but also losses. And anybody who's trading CFDs or considering trading CFDs should understand this key risk aspect of CFDs. There's more information about this in our product disclosure statement on our website, or you can ask our team by calling the 1300 number that's on your screen. But having taken those paths, if you're still not sure about any aspect of trading, please seek independent advice. Now, although this is not a picture of me, it could be. There have been plenty of times where I've become glued to the screens, stuck in the market, trading all the way through the night, through the European session and into the US. And there's been plenty of occasions in the past where I've had to put my head down on the desk to grab a quick, refreshing nap so that I can keep trading. And so a challenge for me is to not allow the markets to overtake my life. I trade because I want to make money, not because I have a particular keenness to be stuck to the screens. And that's the idea behind the 5 minute a day trading strategy. It uses the key principles of successful trading to come up with a strategy that is not only got a reasonable expectation of profit, but is also time efficient and reduces the time I spend in front of the screen. This is our 6th 5 minute a day trading campaign. You can see the results of the previous 5 campaigns. What sometimes surprises newer traders is that it's possible to make money out of the markets with a success rate of less than 50%. Now, each of these trading months has between 20 and 23 days, and you can see that the number of winning trades required for each strategy is less than half that amount. I'll explain more about that at the moment. But suffice to say that 4 out of 5 of the campaigns so far have made money, and in the 6th campaign we'll be trading Euro-Yen based on a pattern that our quantitative analysis team have detected in Euro-Yen trading as the European markets open up. Now, you might also note from that previous table that it's been more than a year since we had a 5 minute a day trading campaign, and this is why. This is a daily chart of Euro-Yen, and down the bottom is the 20-day volatility measure. And you can see that in the middle of 2014, like almost all currency markets, volatility in Euro-Yen dropped to historic lows. Now, while volatility scares investors, volatility is a trader's friend, and periods of low volatility reduce overall opportunities for traders. And that's why we haven't had a 5 minute a day trading campaign for some time. A reliable pattern that could deliver a profit was not identifiable through most of that period, because to identify a potentially profitable period, we look for a minimum of 4 months of data to analyse, and we simply couldn't find that last year. The good news is that in September, the market started to normalise and currency volatility returned, and you can see on the right hand end at the bottom corner there that volatility is returning to more normal levels And that's what gives us the opportunity to conduct this 5 minutes a day trading campaign. There are two key measures for trading success, and these are in ratio will tell you whether or not you have a reasonable expectation of profit. The first is the win rate, the number of successful trades that a trader identifies. And the second is the profit to loss ratio, how much a trader makes on a winning trade in ratio to how much they lose on a losing trade. And it's by varying this combination that we can come up with a reasonable expectation of profit, even if our win rate is less than 50%. Here's a picture our quant team drew. This chart shows every day of trading in the month of October 2014. They've all been set to the zero line, and we can see how each day's trading evolved on the time frame at the bottom of the screen. And the reason we create this picture is to give us a visual idea of what sort of patterns we could be looking for in trading. In this case, you'll note the conical shape of the overall pattern. That what seems to be happening here is on enough days to make it potentially profitable for a trader, the direction for the trading day is set in the first moves in the market. That is, it's suggesting that Euro-Yen trades truly over the course of the European session, that the intent that is shown in the direction of the market is often correct, or correct often enough for traders to take advantage. And here's the results of the analysis our quantitative team did. You can see that we looked at the period from September to January. The number of trading days is across the top. And you can see that in each case, there was a stop buy entry and a stop sell entry created. And we then tabulated the results of those potential trades. At the bottom of the screen, you see the number of successful trades in each month and the number of unsuccessful trades. And at the very bottom, whether or not it was a profitable trading month for this 5 minute a day trading strategy. You can see that over the period, 4 out of the 5 months were profitable, where we have many successful trades in a single month, like October, where 11 out of 23 trades were successful. The profit potential is very substantial. On the other hand, in a month like November, where there aren't many successful trades, in this case only 4, the result is a loss for the month. But overall, over the 5 month period, this 5 minute a day trading strategy delivered a very substantial profit. So what is this strategy? Well, in Euro-Yen, at the European opening, which is 6 AM London time or 7 AM Frankfurt time, I placed 2 stop entry orders based on the price at that time. That is, I look at the last candle before 5 o'clock, the 4:59 1 minute candle, take the closing price and then create 2 orders, one to buy 16 pips over that price and one to sell 9 pips under. Now both orders have a stop loss at 11 pips and a take profit at 30 pips. And when I place the orders, I also create price alerts at those entry prices. Just to be clear, at the moment, the 6 AM London time is 5 PM in Sydney or Melbourne, 4 PM in Brisbane, 4:30 in Adelaide, or 2 PM in Perth, and on the right hand side you can see the time in other centres. Now please be aware, as the southern hemisphere moves out of daylight saving and the northern hemisphere moves into daylight saving, these times can change, and any trader thinking of implementing a strategy like the 5 minute a day trading strategy should be aware of any changes in the relative times, remembering that the key factor here is 6 AM London or 7 AM in Frankfurt. Now, stop entry orders are not used by all traders, but I find them a very powerful tool. On the CMC order ticket, you can create a stop entry order by clicking on this right-hand dot here to create a stop entry order rather than a limit order or a market order. Of course, what we're looking at is Euro-Yen, and in this example, the reference price, the closing price of the 1 minute candle at 4:59 PM in Sydney or Melbourne was 135.54. And so this is the buy stop entry that I've created at 135.70. That is the reference price plus 16 pips is my stop entry order. Now these windows will appear when you click on stop entry, and that's where I put my stop entry price. I also set a boundary on it. Now if I set that to 0, there is the potential that I may not be executed at the price. That is, that if a fast-moving market occurs and the machine is not able to set me at 135.70, I might not trade. So I give the order a little bit of room to make sure that I get executed by setting a boundary a pip above that entry price. You'll note too that there are stop loss and take profit orders attached to this, 11 points below and 30 points above the stop entry buy price. And of course, once I've created this order, I then create a sell stop entry order at 9 points below the reference price, that is 135.45, and attach a stop loss and take profit at the same distance away as this ticket. I then set the price alerts at 135.70 and 135.45 so that when one of the orders is triggered, I get an alert that reminds me to cancel the other order, because I only want to trade in the direction that is set early in trading. Here's an example of a successful trading day under this strategy. Now, bear in mind, it's more likely than not there will be more losing days than winning days. But I've put this up to show you how a winning trade might work. Down here you can see that the line that I've drawn on the chart is at 4:59 p.m. on the 29th of January this year. And the reference price at that time was 132.61. I will be rounding to the second decimal point. So at 132.61, I placed two orders. One of them was a stop buy entry order, and that was triggered at 132.77. I then cancel the sell stop entry order and let the market and the take profit order or stop loss orders that I've attached to this order do their work. And heading on towards 6:30 that evening, the take profit was hit at 133.07 and 30 points banked for the 5-minute a day trading strategy. Now, it is interesting to note that the market went on with it, but we didn't choose these parameters carelessly. The 30 points that we're looking for in a winning trade is the combination that gave us a very good expectation of profit. But it is interesting to note that the principle that we identify, that pattern, that true trading pattern from the European Open, did occur on this particular day. There are risks, as there are in trading, and all traders should be aware of them. And some of the risks to be aware of are on the screen in front of you. Now, the first risk, of course, is that we have not enough successful trading days. If I get 6 winning trades in the month of March for the 5-minute a day trading strategy, the strategy will break even. It'll be up 4 points according to my projections. So I'm looking for a minimum of 7 wins to make a profit in the 5-minute a day trading strategy campaign during March. There are other risks for traders to consider, and slippage, as we discussed earlier, is one of those. Market gaps, another important risk, and while they're fairly rare in foreign exchange markets, and particularly liquid markets like Euro-Yen, they can occur and might result in a trade not occurring. Another important risk to the 5-minute a day trading strategy is the failure to place a trade. The number of winning trades during the month is crucial, and missing just one winning trade could swing the profit expectation from profit to loss. And so failing to place a trade is a real risk to the success of this strategy. Another risk is varying the trade size. This strategy is built around the idea that the trader will place the same size trade every day. That's what I'll be doing. But varying the trade size would introduce another element of risk and change the potential profit or loss profile of the trading strategy. Now, each day at 5 p.m, I'll be blogging the reference price and the details of my 2 stop order entries. I'll be putting them up on our blog at cmcmarkets.com.au, and I'll also be tweeting them under my handle there, McCarthy_CMC, and I'll be using the hashtag 5-minute a day trading. Please feel free to get involved. I'd love to hear from you, particularly for implementing this strategy or a strategy like it. You can place comments on our blog after our daily results posting, and you can also tweet us using that hashtag 5-minute a day trading. Now, there's more information about this strategy and some more detailed analysis at the blog. feel free to peruse that. There is a white paper available that outlines a lot of the principles and risks involved in the 5-minute a day trading strategy. So join us starting on Monday, March the 2nd for the March 2015 5-minute a day trading campaign.